This is a highlight that's kind of like generally speaking. First of all, you've got a 250 lot buy pulse right above the overnight highs comes off. That's not necessarily enough to say the highs are in. Then you come down and you get a bunch of longs that come in right in here, right there, which flip the laser to green. Fine. That maybe might not be enough. Then you get, and this is a tricky spot, a good area that becomes pivotal, not high low close divided by three and all this mathematical stuff to give you a pivot, POC, uh, value area high, and all that stuff that creates pivotal transition, but actual other people's positions, right? Some semblance of that has to be part of the equation of are you bearish or bullish? And so we move through these red and green dash lines. And even if it's hard to change your opinion, that's when it's most important. All right. And the market slips lower and stays bearish. All right. Let me rewind that. So it finally slips through these green and red dotted lines, gets bearish. And then you hear me talk about this or see this illustrated in real time on this transition B2B type moment. And the market just focus on these right in here. Market comes down, comes back up, uses the red as resistance, comes back, uses the red resistance again, and sells off with some nice sell pulses that actually get price to go in the direction that you would expect it to. And the market comes off again, uses the red as resistance a bunch of other times until it finally is able to splatter through 84, 85, and I might have cut that off, but you could look back on this date, August 21st, and say, what did it do around 10 Central on the 21st? And it was a move through the 84, 85. Why is that important? Today is the 21st, right? Yeah. Why is that important? Because this is what we draw. The congestion box. This is the middle, 8 through 86. It's also a POC. Why is it important to look at a point of control? Because a lot of people in this business look at profile stuff. And so it's our job to see what's popular and do the opposite of what's popular when we've seen that it's not working. That's when you're getting in front of the herd at the right time, when they're on the edge of a cliff, so you don't get stampeded or trampled on. All right. And so the market ended up sliding to 86 right through it. Boom. These 84s were in trouble. Well, why 84s? Why is that in trouble? Not just because it was a swing low, because of all the rotations and clear support that it showed. If it's clear support and a fifth grader could see that this 84 was support after it was support, that's when you don't want to use it. If a fifth grader could see it and point it out, that's when you want to do the opposite. Look for the obvious and do the opposite. Every single time, of course not. But there's a low probability that support that's already showed that it's support is going to keep being support. If a fifth grader could say, hey, Dad, hey, Mom, good support 84,